Now, while we talked about yesterday very carefully and this trade, especially which turned out to be really good uh, from this mark, and now as of now we really don't have anything going on in oil. As you can see, the fisher has turned bullish, but the super trend has turned bearish, and the concerns that the demand is falling through is overtaking or over influencing the market from that plus uh, supply cut and all that scenario regarding that. So the move was mostly in expectation of that, the supply being tight, and even with low demand, the market would remain tight, but because of different things and the increased mm, recession fears and the problems that China are facing, we could see, we are not yet seeing that. We could see uh, oil pushing lower again. So we would be I would be careful on this level. So this would be the mark I'd be very careful around. So this would be the mark I'd be watching. So this zone, I think, could control how oil is going to do in the coming weeks. So if we see the price going there and then bouncing, we could target that 80 mark before going lower, and that way the move will happen that way. But if it somehow enters this zone or goes below, then oil is going to remain as it was. If we look at oil as it was, so it's going to remain in that bearish trend. So technically speaking, oil is not out of the woods yet, because if we really want to nitpick here, if we draw a trend line down this line, it's barely out. It's barely out of that trend, and it did close on the line, and this bar going being outside, it needs to close outside. Like it opened outside, it needs to close outside of this trend. So only then we are going to see, because if this comes back inside, who knows, it could fall to $70. But yeah, the market is not like that, and with generally an OPEC expected in 5 days, mm, the markets are likely to push through. As we can see, the dollar, sorry, the daily RSI is also on the lower side. It's trying to pick up pace, and in this going 50 range, it could pick up that pace and try to move upwards. The daily chart, the 4 hourly chart is also quite busy, but it is not that much lower anymore. We are already seeing weakening signs on the MACD on of the bullish trend. We are already seeing weakening signs on the RSI on the bullish trend. So these are not good signs, but it needs to follow through and test that, like EMA, uh, for the mm, next like 15 or 20 days. So yeah. Also the dollar falling through. If we go back to the dollar, it falling through the 200 EMA. It's 200 MA. It's going to uh, for the first time in a long time, it closed below that line. In actuality, it is closing below only for the first time since 2022. So that is something going to be that is something that is going to be really interesting, because if the dollar remains like weak, uh, it obviously mm, helps oil pretty much keep that upside intact. On other news, EIA is going to be important, which we have not had the forecast yet, but with today's API, it is going to be an idea where the price could head. And even with the API at 2 a.m., 2 or 3 a.m. Now, we could have that push on oil today itself, but tomorrow's AI is going to be important, especially the joint 2 week result last week, which was not that good for oil, and we saw a 17 million inventory rise, which is not at all helpful. So that is going to be something that we need to be careful about. That is something we need to be watching, and of course, the minutes is going to be important in any case. Whereas the other things are other like side data on the of the market, it's not going to be that important when it comes to crude. Yeah, about that, I'll just include natural gas in this video as well, because natural gas we have not much to say, and I don't think it needs a new separate video to of its own today, because it's just continuing the down trend. There is no movement on the downside, and the forecast for the next in 14 days for weather is cooler than seasonal temperature. So what is the normal temperature of at this time for any season? The weather is expected to be cooler than that, so that means more demand for natural gas, and that means higher prices, but we are not seeing that reflected on the prices. And because of the inventory being higher than normally, so we have since September, late September and October through November, we have seen continuously higher inventories. That may be due to so many reasons, uh, and including production and all, and like supply side problems, which generally uh, increases price, which what we saw last year. But because they don't want to face such problems again, they are pushing the inventories, and which in turn is pushing the prices down. So one $2.89 and especially average price in November being down more than 20% is not something that is normal for November, and we could see a follow through that could take the prices a little bit more up on the upper side, but we don't have any indication of that just right yet. Okay. Technically, the prices are still exhausted. Technically, as you can see, the prices are on the RSI, on the 4-hour RSI, MACD. This is trying to change. Also, in our signals, the the momentum of the fisher is very definitely bearish, but it will take some changing. It will take some time to recover that. So I am expecting late November or early December price to push through up again, because the weather is going to be a crucial factor on trading natural gas. as we know. So that's about it for natural gas and oil. If you have any questions, kindly let me know. I'll answer them. Thank you.